welcome to Bloomberg Queen. This is the Market Wrap. I am Agam Vakil. Let's take a look at how the markets have fared for the week. And again, do remember that it was a truncated week. So we did have one holiday at least, and nearly less than half a session when it comes to the more trading day. But let's take a look at how we've seen things pan out. At least this day of Friday, it was largely flat. But I wanted to pull out all the stocks which have gained and lost through the course of the day, and this is your Nifty 50, where you have seen the Nifty since last Friday will remain largely flat, 0.3% gains. What stands out is gains in Yes Bank, followed by Sun Pharma and UPL. Of course, Asian Paints has gained, but this is largely an account of the gains that we saw today because of the crude prices coming off. On the losing end, however, significant weakness in Cipla, down 13% again on the back of earnings. Vedanta, Indian Oil Corp, Titan Company, all of them, of course, declining and coming off to a certain extent, but it is essentially the OMCs will remain in focus considering the drop in crude prices. Let's take a look at the Nifty 500 as well and see what are those gainers and losers on the broader end of the spectrum. And two companies which we perceive to have governance issues, Infibeam, Avenues and 8K Mile Software, all actually advancing in trade. And you also have ITI, Lind India and Gateway Distriparks all advancing, gaining well over 20%. And on the losing end, we have something like a V-Mart down 16%. Balakrishna Industries taking a hit after the company announced that it's likely to see lower volumes than expected. Venky's and Cipla, along with Eris Life Sciences, all declining in trade. But on the whole, it's turned out to be a fairly volatile week, considering the fact that earnings came and we did have a lot of these earnings reaction. And the Nifty, of course, is where it is at around 10,585, just short of the 10,600 mark. As we move into the next week, what are the levels that we're watching out for, and what are our technical analysts telling us? Before I go across to that, I just want to point out that when it comes to your open interest distribution, we're still looking at 10,200 put, who is the one with the maximum open interest, and this is where we're going to see some amount of support come through. And on the higher end, excuse me, it's the 10,700 call, which will see the next level of resistance. It's going to be a 500-point range as we move into the next week. But when it comes to technical analysis, the immediate levels that you can watch out for on the Nifty and the Bank Nifty, this is what some of those technical analysts are saying about those levels in the immediate term.
There's continued positive trends for the Nifty. I would say that you have some strong resistance which is likely to come up around that 10,730, 10,750 level. But all in all, I say the trend is positive. Keep a support level of 10,480 in mind and hold on further.
Nifty still on the shorter term time frame of the chart has been trading on lower tops and higher tops, higher bottom formation. So what I feel right now on an immediate basis, support has been concerned 10,450 or even 10,400 would be acting as a support. It doesn't break, the momentum would be continuing on the buying side. Now, if we talk about the immediate basis then anything below somewhere around 10,550, taking a spot level, one can take a buy call in it with the stop loss of 10,500 and play for the target of 10,670 or say 10,680 where the resistance lies. Might be taking a couple of days or say a week time frame before this target got achieved, and after that we can see a small profit booking.
Well, moving on, Indian equities began Samvat 2075 by clocking their best Diwali gains in a decade after nearly wiping out the yearly gains on concerns over higher crude prices and a weaker rupee. As Indian stocks enter a new trading year, which are those pockets of opportunities? Take a look at what the market veterans had to say.
You know, the markets beat to its own drum. We like to think that, oh, elections come, market will fall. That doesn't typically happen. We had a very sharp break in the market, as you know, in September, October, 15% fall. So the question that must occupy investors, was this a break in a bull market or a bull market topping out? And the evidence so far suggests that it's just a break in the bull market. So obviously the index and individual stocks will probably head higher over the next Samvat.
Sure. There is a debate between running a diversified portfolio at this point in time against a concentrated one, where would you stand here?
That's a very esoteric question that people do PhDs on. I happen to prefer a diversified portfolio, but you know, the people who know their businesses prefer a concentrated portfolio. So there's no right answer. It depends on what style works for you,
sure,
the amount of money you manage, for whom you're managing it. If it helps you, I run a fairly diversified portfolio. The top 10 stocks must be 50%, but then the discipline breaks down.
Right. This is the money. We also had the returns conclude in the United States. If you keep that aside, what are the other global cues that you're keeping an eye on that could perhaps impact global markets and perhaps India?
You know, the two things that are obvious are, of course, if oil prices again become buoyant, they've been under pressure, which has helped us tremendously. And obviously, if there's some big crack in the Dow, I think a regular crack we can handle. Those are the two major factors. And the thing, we need to get back our own confidence after the recent NBFC problems. We need to get confident about our markets. And I think that repair takes time. So hopefully we will repair.
Some of these global businesses like casinos and perhaps liquor, which have made into India, where do you stand on some of these?
I mean, those are some stocks that have fallen in this fall, and they look like good bets to make. So I think these are themes that I would be attracted to over the next 5-10 years,
right,
because they're great businesses, they're impregnable businesses. There's some great franchises out there. So whether it's in gaming or whether it's in liquor, whether it's in some consumption space, those stocks still look quite attractive to me.
There's also the question of elections this year. Can that cause some volatility? Are you expecting that to happen?
That election is always a very questionable issue.
Right.
One doesn't know the Indian people how they will turn out. So, but I think on the whole, the Modi has done a good job. That is, in the last 4 years, they have done excellent things. And demonetization, then GST, all these things are, I think, should put positive in the mind of the voters.
Right. Mr. Choksi, there is a question about whether or not you want to stay with the tried and tested names in the markets, or would you want to go ahead and venture out and perhaps take a little more risk with the relatively smaller names? How would you go about it, and what are you asking your clients to do?
Basically, my philosophy is that I first look at the industry, which industry is doing well,
okay,
and out of that I will identify a company,
right,
which is good. That is, and management is first thing,
right,
and financial and the growth of the company you have to see. But today the management plays a very big role, and I think I am rather going for a small company. I would like to remain with a mid-size or a large company because they can withstand the adverse circumstances.
Okay, Mr. Choksi, then I have to ask you, what stocks are you recommending to your clients right now?
Basically, today we are recommending Deepak Nitrate number 1.
Okay.
Then Nosil is second number. Then third one is JK Paper. Paper industry is doing very well.
Right.
So JK Paper is there. Commercial vehicle, Jamna Auto is looking very good.
Well, moving on to the domestic institutions, and what's really changed in the month of October is the fund flows, especially from the SIPs that the entire industry has seen, and that actually has changed. In fact, the number that we are working with, which is over 15,000 crores together along with equity, ELSS and arbitrage, is the highest that we've seen in this fiscal and the highest since February of 2018 of this year, this calendar year. And this, of course, is will be taken as a positive because of the retail investors' confidence in the markets. And well, this, of course, is going to bode well according to a lot of your mutual fund managers. They're expecting November to be even better. And this, of course, is your FIIs in when it comes to your Indian debt. After months and months of subdued numbers, we're starting to see some uptick coming through as far as your debt markets are concerned as well. And this perhaps is your positive, coming through. So we're going to keep an eye on these numbers moving in. But what else are we keeping an eye on as we move into trade next week? Well, earnings, the final leg of earnings. And we're going to have 6 Nifty companies announce earnings, which will include Coal India, Eicher Motors, Tata Steel, Sun Pharma, Aditya Birla, as well as M&M. So watch out for these as we move into trade next week. And with that, it's a wrap in the markets, but there is lots more lined up. So stay tuned to Bloomberg Create, and we keep bringing you more.